It seems pretty apparent that the panic is beginning to set in as we begin to have a slow motion global banking system and currency collapse into perhaps maybe even a hyperinflationary scenario. We've had the Fed totally 180 on them admitting about inflation. Janet Yellen saying recently that it's going to grow a little bit more than she was expecting. Meanwhile, you're seeing the White House actually pumping the brakes on it, saying, oh, it's actually not that bad. And all of this different messaging makes me feel like the panic is finally starting to set in. So today's guest is none other than my good friend, Mr. Steve Penny. And we're going to be discussing what happens next to the global financial system, how this affects gold, and most specifically, how you can profit off of what is happening. So if you enjoy today's episode, make sure you hit the like button on this video. Give us a comment right there down below. Steve runs Silver Chartist. It's the best free newsletter in the entire world to understand what's happening in the markets, what's happening in investing, and where are the best ways to make money. That's Silver Chartist. It's free. Every day I get these amazing people telling me about all the great things that have happened. I know we had a subscriber that made enough money to buy a new car in a very quick period of time from using it. I'm literally not joking. I know it sounds like I'm selling a used car, but like that actually happened. And so if you're looking for an opportunity to really, get ahead financially and take advantage of what's occurring right now in the world in these unprecedented times, Silver Chartist is free right there down below in the descriptions and pinned to the comments. And give us a comment down below that says Steve rules. Thanks to our sponsor, Vizsla Silver, one of our favorite silver and gold mining stocks. Steve, how are you?
Good, man. How are you?
I'm doing good. So first, for everyone listening, we want to send our condolences to your family. I wasn't going to bring it up, but you were saying before, there's a lot of people that follow your work closely. So maybe let's just start there. How are you doing? And maybe you could, if you want to let your viewers know what's going on in your family.
Sure. I really appreciate the kind words. And I've just been overwhelmed with the kindness and the prayers and the good thoughts that were sent from all the followers on Twitter and social media. For my dad passed away about a week or two ago. He was my best friend in the world. He lived about a mile up the road. He was the kind of dad who didn't really understand anything I was doing. He doesn't know about the markets, but he wanted to hear about all of it, even though he didn't understand it. So I miss him terribly, but I know where he is right now, and I've got peace about that. So, but I really, really appreciate the kind words from everyone. So, and you, thank you guys so much.
Yeah, we're all sending your family our love. I'm sure this decade, as your work continues to reach more people and your business continues to grow, he's obviously not only going to be incredibly proud of you, but I think his spirit's going to help carry Silver Chartist to more and more and more people.
Thanks, brother. Really appreciate that.
Cool, man. So let's talk about the title of this video, and the thumbnail of this video is, I feel like the panic has begun. And the reason I say that is because we've had the Fed do a total 180 on inflation. Janet Yellen the other day, total 180 on inflation, now saying it may get bigger and it may go on longer than expected. And within the same 24-hour period, I saw a clip of Biden saying, we expected this, it's not that bad. So they feel like they're trying to calm the flames down. Meanwhile, it seems like other seats in the table are saying, yeah, it's a little worse than we thought. So what's your state on this panic that has begun?
Yeah. So first of all, there's a big debate right now between, are we going to see inflation or deflation? And I think, some of these debates kind of get heated, and really you can have two very intelligent analysts with well-reasoned opinions who are both right, just in different timeframes. So it is possible that we see some kind of deflationary impulse over the short term, but I think almost all of us are in agreement that we're going to see higher and higher inflation going forward as a macro trend. And of course, the government is trying to prepare expectations and move the goalposts ahead of time so they don't look like fools. I mean, that's going to be hard for them to do, but if they keep moving the goalposts. So the Fed's dual mandate includes price stability, which they've said as a 2% year-over-year inflation target. Well, if they say, hey, well, it's been down at 1% for all these years, well, we can have it run hot for extra years to average 2%. So they're going to start doing things like that. So they don't look like they messed up when inflation does run hot, which is going to happen. But eventually, people are going to lose confidence. And I think we're seeing the early stages of that. The general market, market participants, everyday people are waking up to this inflation narrative. And I think it's here to stay.
So recently, there's been some fear of a new wave of lockdowns and whatever variant. And how do you feel that another round of lockdowns, even if it's not as it seems like it's going to be hard to get the entire United States shut down again, but I could certainly foresee certain areas
Mhm.
shutting down again, the East and West Coast, namely. How would this affect what's happening, not only in inflation, but how do you believe that it would affect the stock market, gold, mining stocks, and the overall state that we're in?
Yeah, so that kind of ties into where you could see a deflationary impulse first, followed by the massive inflation. Because if we go back into lockdowns, that's deflationary until the Fed comes in and opens the monetary spigots even more, just like they did in March of 2020. I think we would see a replay of that. Everything would probably sell off in the short term, to include possibly the metals and commodities and the mining stocks that we track. But we're prepared for that because we think that if that were to happen, it would be very short lived because the Fed isn't going to just stand by and watch everything implode in a deflationary spiral. They're going to print whatever amount of currency it takes to get the inflation they want.
The scary thing is that if they do another round of lockdowns, think about how much money was printed. They say something about 40% of all US dollars were printed in the last 18 months or so, more or less. And if they do a new round of lockdowns, one would think that they would then resort to the same type of emergency bailouts that they did during 2020. And we've seen very quickly that combined with shutdowns and supply chain disruptions from lockdowns just creates even more inflation. What type of effect do you think that lockdowns would have on money printing?
Yeah, I mean, I think you're exactly right. The last number I heard was like 35% of all the currency that's ever been created was made in the last year. I don't know the exact number, but regardless, it's ridiculous. And there's two sides to inflation. And actually, inflation is really by definition an increase in the money currency supply, and then rising prices are a symptom of inflation. So we
Hmm.
haven't necessarily seen the. I think we're in the early stages of seeing the result of that or the symptoms. But we've also got, in addition to increased money supply, there's been less productive capacity, so less goods and services. So you've got more currency chasing fewer and fewer goods and services. And if we go back into lockdown, that's only going to exacerbate that problem. And people think like, oh, maybe the Fed can figure it out. They'll figure it out. They always do. There is no solution here. I mean, this is a predicament. There's no solution. There's only managed outcomes, and they have a choice between a deflationary collapse or an inflationary depression. And history suggests, going back thousands of years, these politicians and people in power always choose to inflate because people don't understand it. They don't know who to blame, and instead they blame each other. When really, that inflation deflects the blame away from where it belongs.
Now, what's your advice to people, especially people that are watching a new round of fears of lockdowns with market sell off? Mining stocks have been trading sideways and in many instances have been hit pretty hard. And then there's a certain crowd in these types of shows that says, the big legendary crash is coming. It's
Mhm.
going to be worse than 1929. And it's coming. They even pick dates. It's coming on August 4th. It'll be here. And this is the one where we're going to be in caves again. And so there's a lot of fear. And then people are seeing their mining stocks trade sideways. So, what's your advice to people that are hanging on by a thread?
Yep, I love that question because we're getting to some of the most important things that I think are easily overlooked by resource speculators and investors. We all want to know what are the best stocks to buy and what's the next short-term move, what's going to happen next week. Those are good questions to ask, but I think much more important than those two questions are developing a personal strategy that you're comfortable with. There's no one size fits all. We just laid out 4 different strategies in last weekend's report that fits your risk tolerance, your objectives, your personality style. So you want to have a good strategy, and then position sizing. It's easy to, when you learn all of these things, to go like 100% in on junior mining stocks. You know, it, I'm not saying there's anything wrong with that, but I think a lot of people don't know what they're getting into. And then when we see these 30, 40% pullbacks, it can cause you to sell too early or at the exact wrong time. So I think strategy and position sizing are really important things to talk about or think about.
So I feel like I've been spoiled in that I've been able to talk to so many smart people that I've really started to truly grasp that, yeah, you're the things that you buy. Rick Rule says he buys things expecting them to go down 40%.
Mm-hmm.
And talking to so many smart people like you guys has helped me. But let's talk about it in a little bit more depth. What's your advice to someone that is dealing with the fluctuations of and the volatility of mining stocks, but also gold, silver, and then the fear of a broader market crash from a psychology perspective, because you've been here before?
Yep. Yeah. And it's important to also note, I say this with, humility and everything, but, like my portfolio is still up significantly even after this big sell off. And the reason is because, I saw that opportunity last March in 2020 and, everyone was selling and panicking. And, I've learned the contrarian in me, the Rick Rules, the Doug Casey's, we love those kind of things because that's your opportunity to really get the 5-10x potential. It's not when things have already gone up 5-10x. So, these sell-offs are opportunity. I mean, we don't want to try and nail the exact bottom because no one can do that. So here's just a couple of strategies that you might consider. Again, not advice for anyone, but like when it comes to physical metal, I just buy a certain dollar amount every month. That's dollar cost averaging. So that's a nice strategy for me. I use that with physical metal. For my long-term portfolio, I like to scale in on weakness. So I always keep a little bit of cash in there and, I add a little bit of cash every month. So I've always got a little bit of cash coming in and I scale in on weakness. I'm not trying to nail the bottoms, but like, last Friday when everything was tanking, I'm scaling in knowing that it could very well go lower. So that's another strategy. And then another strategy is more conservative, but some of the wealthiest people in the world, guys like Paul Tudor Jones, these Wall Street hedge fund guys, they don't buy things that are going down. They buy when they go up. So there's nothing wrong with just waiting for a reversal in the sector. I mean, you're going to leave some on the table, but it's a safer approach. And again, one isn't better than the other. It's just what's better for you. So those are three strategies to consider.
Very interesting. So what is based off of the data you're looking at, what is your assessment for gold and silver now, and how will it be affected by this continuing fear of lockdowns, unless you think this is over exaggerated? I am of the assumption, for whatever it's worth, that there's going to be a strong push for lockdowns again here pretty shortly. And whether we see that or not actually become a reality everywhere like it did last time, that's to be determined. So I wonder, how do you feel that gold and silver stand now, and how they will be affected by this, even if it's not lockdowns, the fear of lockdowns now?
Mm-hmm. Yeah, and that's why I wasn't always into charts and technical analysis, but for the last 7-8 years, that's been my focus. And what I really like about charts is that there's a saying that price and volume precede the news, because these insiders on Wall Street or whatever you want to call them, the assumption, I think it's accurate, is they know what's going to happen before the general public does, and they can't cover their tracks on a price chart. You can see price and volume, and then you'll see the news headline come out after. So what I see in the charts right now is, both metals are hanging on by a thread, and downside risk remains. I'm trying to avoid predictions because I don't have that level of certainty over the next very short term here. But I can tell you that we lost some key support levels in silver. And I think $23.75 is a very real possibility. That's the first key level of support. And I think probably a worst case scenario would be $22 in silver. I don't expect that, but I'm mentally prepared for it. And then gold 1675 is a really key support level. That was the lows back in March. So rather than trying to predict, I'm mentally prepared for the outside chance that we do fall back to those levels. And I want to keep some cash available if we do.
So it's interesting to see in real time a gold and silver bull market because, I started this channel maybe 14 months ago and I really started it to educate myself. And many people have described the bull market. Rick has famous Barron's Gold Miner Index that he shows the volatility of it. And you've discussed it at length because you've lived through it yourself. Now, can you give us a little bit of insight on the biggest things you've learned from a bull market, especially as it pertains to it affecting your psychology as you see such extreme volatility?
Yeah. So the term bull market, a lot of people don't know where that came from, but they call it a bull market because it's like riding a bull. Bulls try and shake loose everyone, right? So the nature of a bull market is to shake loose the maximum number of retail participants as possible. It's not easy. If riding a commodities bull market were easy, there'd be a lot more retail millionaires. So it's difficult. So you got to be prepared for these kind of pullbacks. And, we can look at price charts and all this, but really it takes a deep fundamental conviction in the bullish thesis to be able to hang on and not be overly concerned when we see these kind of drawdowns. And if you don't have that conviction, perhaps either revisit what got you into the sector in the first place, do some education, or if you don't buy it, then reduce your position sizing. But my fundamental conviction has not changed one bit.
So, for everyone listening, if you haven't yet, right there down below in the description and pinned to the comments is the link for Silver Chartist. Like I said, I believe it's the best free newsletter you maybe will ever sign up for, especially in the precious metals market. So it's free. It's right there down below in the description and pinned to the comments right there down below. If you're still with us, give us a comment right there down below to help out the good old YouTube algo. So Steve, let's move on to predictions. So predictions for a coming market crash, predictions for inflation, hyperinflation. Let's pull ourselves out of today and let's look at a 40,000 foot view. How do you see things shaking out right now?
Okay, here's a really bold prediction. I will tell you that there's a 100% chance that we're going to see a major market crash. The question is when. It's a boom bust cycle, so we're going to see a major market crash. The timing, you mentioned, there's people out there willing to give dates, and a lot of smart people. And I don't mean to, knock them or anything, but be aware of that. There's always people out there giving dates. So, I used to make major financial decisions based on someone's predictions, and very rarely do they come true when you give it an event and a date. I'm willing to say there's going to be a market crash. I'm not willing to put a date on it. So that's going to happen. I'm willing to say this isn't a bold prediction at all, but we're going to see very significantly higher metals prices. The timing is a little bit up for debate, but I would say over the intermediate term. I think I lost track of the initial, the main intent to your question there. What
do you think that we'll see? No, you're right. I mean, you're right on the money with answering the question. Now, do you think that we'll see a market crash this fall from lockdowns?
It's certainly possible. I mean, seasonally, market crashes tend to happen in the fall around October. So there's always a heightened risk of that going into the fall. But I don't know. I really try to avoid the predicting the time. I'm very confident it's going to happen, and I'm prepared for it. And I have a strategy in place. So, personally, whatever I do for our members, a couple of weeks ago when the S&P 500 was making all-time highs and it was just way stretched on every fundamental metric and technical metric you could possibly imagine, we bought call options on volatility, and those are up nicely. So you can hedge with a very little amount of capital, and there are strategies you can put in place rather than trying to predict when it's going to happen.
Now, your brand is Silver Chartist, so let's talk about why being you say a chartist. Mm-hmm. You just kind of alluded to it with the calls you made of the importance of some of the metrics you see on the charts, but why are charts important for someone that is making real financial investments and is not just passively watching the market.
Yeah, I love this question because I think it's so misunderstood. I think a lot of people think of technical analysis and its primary use being a predictive tool. I mean, it does have some predictive benefits. A good technical analyst can be accurate maybe 65% of the time. That's really good. That's about as good as you're going to get. That's not a huge edge. But what charts do allow you to do is manage risk, um, and create if-then statements. If this happens, then this. So, like for example, when silver lost the 200-day moving average, I said, if that happens, then we're likely to fall to 23.75. Um, so it just allows you to see where we are. And, a lot of people also have pullback targets, right? Hey, I'm going to scale in if it falls back here. And, people who don't look at charts are just arbitrarily pulling those numbers. I'm not sure where they get those numbers from, but you can look at a chart and see support levels. And okay, if it comes to this support, I'm going to buy here if it comes back. So it's a nice tool to have. It's not like I'm not a pure chartist where I only look at charts, but I think it fits nicely in the mix.
What do you think will be the driving factor of gold and silver moving higher?
There's so many catalysts. I mean, so you've got supply demand fundamentals of the physical metal. You've got, obviously, that we're all very familiar with, is the monetary component, where they're continuing to debase currencies globally. And then you've also got what someone I like to follow, Steve St. Angelo, calls the energy return on energy invested. And, there's stores of energy. That's what physical metals are. So I think as we see EROI, energy return on energy invested, that ratio continue to compress, that's just another bullish factor for the metal. So it's like a perfect storm, and especially for silver too, because it's got industrial demand and monetary demand. So let's say the economy does rebound and all is well again. Well, with all these electric revolution and EV vehicles and all this coming on, well, that's going to be a tailwind for silver, for the industrial demand. But if we do see more of a collapse, you've got the safe haven demand for silver too. So I see it kind of like as a dual um, bullish case there for silver.
Even if the economy, quote unquote, rebounds, it's going to rebound in a highly inflationary way, because the rebound is going to be entirely driven from this essentially from the Green New Deal. And I think people drastically underestimate. I think this is the only plan of the elites at this point, is unless they're planning to keep these lockdowns up indefinitely, as things open, they're going to have to give people jobs. Now, the whole Build Back Better crew has said electrification and renewables and green is going to be so important. And unless you're actually spending time learning about the mining industry, you do not realize how underinvested all of these things are. I mean, if you're talking about putting the entire world on electric vehicles, and you're legitimately talking about making it illegal to sell a gasoline car, regardless of whether that's a good idea or not, that's not my point. My point is, people do not understand the sheer amount of raw material and natural resources that have to come from the ground, the commodities. And we're already seeing inflation in commodities without an incredible demand for them. I mean, what happens when the demand for everything from silver to uranium to cobalt, all these things 10x, and their only plan to reboot is this electrification Green New Deal thing. So they have to continue. The effect that this has over the next 20 years, 15 years, 10 years, 5 years, as they make this push, should be pretty significant, should it not?
Yeah, absolutely. And I think a lot about that too. And I've got a decent exposure to what I call the battery metals, mainly copper and nickel, but other battery metals as well. And there's a couple of small royalty plays in our portfolio that I haven't heard anyone talking about. And a lot of people who want to play this trend of electrification and EV revolution, they go out and buy Tesla or something. I mean, who knows? Maybe that'll work out for you. Maybe it won't. But I'd prefer to buy a royalty on the companies that mine the stuff, the nickel, the copper, the cobalt, all these kind of things, because they're just beaten to a pulp, these stocks and the industry. And I think regardless of the outcome, if we have inflation or some kind of fake recovery, there's going to be tremendous demand for these battery metals. And I think having some exposure is really nice.
So Silver Chartist covers all of these topics, whether it's gold, whether it's silver, whether it's battery metals, whether it's uranium. It's looking at the entire natural resource and commodity space and looking for the best opportunities, understanding what's happening in the broader market, and then specifically what mining stocks are worth buying and which ones aren't. Steve does it all over the time, over the shoulder, shows you what's going on. The link to sign up is free. It's right there down below in the description and pinned to the comments right there down below. If you're listening, we want to thank you for listening. We want to send all of our good vibes and well wishes to Steve and his family. Give us a comment down below and let us know if you enjoyed today's episode. Steve, was that an accurate summary of what someone can get by joining Silver Chartist?
Sure. So there's 2 levels right now. There's a free version, and the goal is to provide tons of value for free. And that's a free weekly letter that goes out every Sunday, contains charts, commentary on where we see the market right now, and what we expect in the week ahead. We also talk about some individual stocks on that free letter. And then if you want the low ticket premium membership, I mean, we keep it super cheap, but you get an over the shoulder look at exactly what I'm doing, the stocks I own, when I buy them, when I sell them. I send out real-time alerts, and we do monthly mastermind calls. We provide a lot of stuff for a very low price. So I'd encourage you to check that out if you're interested, whatever level makes sense for you.
So link to that right there down below for free in the description and pinned to the comments. Steve, any final words?
No, man, it's always great talking to you. It's been too long, so look forward to connecting with you again. And thanks for inviting me on.
Absolutely. Thank you for listening to today's episode. If you have not yet, make sure you hit the bell notification on this video. Bell notification is what notifies you for new videos. Even if you're already subscribed, YouTube will not notify you unless you hit the bell notification. So thanks for watching this episode, and we will see you next time.